Welcome to Options Lab, a tool crafted by expert traders to identify volatility trends and optimize option strategies. Whether you're a seasoned pro or new to options trading, the diverse features of Options Lab will help you explore current volatility and navigate suitable strategies with ease. Ready to get started? Okay, let's go. We'll start out in the Strategy Lab, which offers support throughout your strategy selection process. Here, we're evaluating Apple. The Smart filter on the left presents 3 questions that lay the groundwork for a strategy built around your unique investing preferences and risk tolerance. The chart to the right helps us see historical and expected price movement. The default charting view provides a volatility cone, a handy visual for estimating the potential range of Apple's price based on volatility. The cone begins with today's price of $215.25 and widens the further we move forward as the future's uncertainty increases. The wider the cone, the more volatile the stock is. Here we can see that a month from now, the price will likely be within the range of 228.41 or 202.09, something many refer to as the swing. Within 2 months, this range expands to a high of 234.80 and a low of 195.70. Our first question explores what direction we believe the stock is likely to go, up or down. You may have already researched this stock before and have an opinion, but if not, you can easily overlay the most recent technical outlook for help. The technical view offers key price levels and a directional bias, utilizing Trading Central's proven trend-following methodology, developed and managed by the experienced TC analyst team. Based on this analysis, I believe Apple's stock price will go up, so I'll note that within the questionnaire. I need to assess the potential magnitude of the move. Is the stock trading at a new record high with room to run, or is there a limited upside due to overhead resistance? Will the move be slightly upward or significantly upward? Looking at the TC technical view, a resistance level has been identified, therefore I'll choose slightly upward. The third and final question assesses your primary focus for trading options in your chosen stock. I now have 5 strategies. An explanation of what each of these mean for an investing strategy is below. I'll choose limiting my risk. It means I am interested in managing risk more effectively by utilizing strategies that have clearly defined risk characteristics, aiming to limit my potential losses. Now it's time for results. Because of my answers, I now have 3 suitable strategies: a bull call spread, a long call, and a bull put spread. Looking at the chart, the highlighted areas indicate the maximum gain and max risk of the selected strategy. I can either choose to trade now or restart the Smart filter. For those looking to build their own strategies or to better understand volatility, the dashboard is a great resource. It offers a high-level view of all the key volatility data points required to form an opinion on what type of options strategy to focus on. Here, we're continuing to look at Apple. The implied volatility rank helps traders determine if the current implied volatility of an option is high or low compared to its historical volatility over a given time frame. It guides traders in deciding whether to favor buying or selling options based on volatility conditions. Apple's current implied volatility rank is significantly lower than it was a week ago, which could make debit spreads more favorable. To the right, the Volatility Levels widget visualizes the gap between implied and historical volatility, while the Volatility History widget plots these values over time for comparison. Apple shows a downward trend in both implied and historical volatility. However, implied volatility is still above historical levels, which could be advantageous for option premium sellers, even with a low implied volatility rank. The upside-downside volatility bias helps determine if traders are anticipating greater volatility in a potential upward or downward move. It looks like option traders are indicating a bearish bias. Timeline volatility bias helps traders identify whether more expensive premiums are found in short-term or longer-term dated options. It looks like options premiums are slightly more expensive in longer-term dated options for Apple. Key data that impacts option premiums and volatility, such as upcoming earnings reports and dividends, is listed below alongside the expected price movement widget. This widget helps traders assess anticipated price movement over the next few monthly expirations based on options premiums. Finally, our peer comparison table lets you see how the volatility data we've just explored for Apple measures up against other leading stocks in the same sector. Here we can reorder any of the columns to identify high or low volatility. For example, if I'm interested in writing credit spreads, I can sort implied volatility rank from the highest to the lowest amongst leading technology stocks. Reordering the ratio of implied volatility and historical volatility helps clearly identify those with the largest implied volatility spread. There you are. That's how Options Lab can help you identify volatility trends and optimize your option strategies.